Hello and good evening to my live stream. This is Live in Lockdown episode number 2, and I'm your host and trainer Yatin Ranade. I have started this 10-part video series so that people who are new to stock markets, who are just wanting to learn more about stock market, especially during these times. So I've kept a 10-part video series where I'll be going live on Facebook every day at around 9 o'clock. So first of all, I apologize for coming in this late. In my area, there is power failure going on almost every night. So around quarter to 9, the power failure happened, and it's still coming and going. So if this feed gets disconnected, I apologize in advance. It is because of some technical failures, and 4G is just not enough to live stream probably. Okay, so today's episode, first of all, is the second episode of our training series. And if you've not come here before, I've already done episode number 1 that happened yesterday, which is the top 5 mistakes investors make when they are new to stock markets. So if you want that, you can just message it to me, or I'll share it on my page again. So if you're connected on our Facebook page, you should be able to see it. At the same time, today's topic is going to be the truth about dividends. Okay, so those of you who have come here for the first time, let me introduce myself. My name is Yatin Ranade. I am the head coach at Capitalized Trading and Investment. I have been in stock market since 2009. This was after I lost my job in a recession. That's when I started learning about markets, and I went into it so much that finally there was a time in 2013 that I also started teaching, because I was getting a lot of people who would come and tell me that I don't understand what stock market is, and I was also one of them, because I came from a physics background. So since then, I have been into the markets, and now I do this professionally, because market happens to be one of my passions, and I like to share what I know. Okay, so again, just for me to know who all are watching right now, I have no idea how many people are live right now. So if you are live right now, can you just put in the comments below your name, so hi, or just tell me where you're live from, sorry, where you're listening to me live, so that I will know that I have some audience. Otherwise, maybe you're looking at the recording as well. Even if you're watching it later at your own time, please put it in the comments below. Okay, so as usual, every episode will start with a little bit of Q&A. Anybody who sent me questions in the previous day, I first answered those, then we get on with the topic of the day. Okay, so let me start with the question that was sent to me by Akshit. He just sent me a very nice question related to something big that is happening right now. I am going to now go on to my Q&A from Akshit. Okay, Akshit. Why did US oil price crash below zero for the first time? Now, this news has been going around for a long time, and he's asked me, if possible, please do explain this in today's live session. So Akshit, this is for you, and this is for anybody who wants to understand what exactly happened with crude oil prices in the US and why were they negative. Okay, so here's the first question. First thing that you need to know: crude oils are traded in a future dated contract, which are known as futures. Okay, so whenever somebody is trying to buy oil, they don't directly purchase oil, they buy contracts, and then the fulfillment of those contract happens later. Those of you who have studied future option with me would remember the future dated contracts, and they work exactly like forwards, but in exchange they are standardized, so you don't have to depend on anybody else. You can directly purchase oil from stock exchange, so not stock exchange, from exchanges. So commodity exchanges all over the world do the same job. Now what is happening is, currently there is a war going on, price war, and there's a lot of things happening between oil producing countries. So I won't get into that, because that's something not directly related to stock market. But here's what the effect is. The effect currently is that the oil prices are falling down. Second problem is that due to coronavirus situation and lockdowns all over the place, transportation has reduced, and overall there is no place left to store oil. Okay, so what happens in case of futures contract? Yesterday was the delivery date of all the contracts. Now, some of you might know that you can settle contracts in cash, right? Instead of actually taking the oil, you can get rid of those contracts in futures market by just paying money, making profit or loss, just set the contract was also liable to buy all the oil. Okay, so that puts the person in a very, very weird situation, because he would also have to incur the charges of storing the oil. Imagine you bought a few barrels because oil is traded in barrels, and it suddenly goes into sorry, and then now you have to take the delivery. Now, as far as warehouses is concerned, where usually these kind of these oil barrels are kept safe on your name, even if you purchase it from commodity market, there is always facilities where you can store them. Those facilities in US are full right now, and nobody's taking. So you're right now, even if you want to sell your oil, you also have to give extra charges to a person to take care of the oil and keep it safe, because oil, you just cannot keep it in your garden. You cannot keep it in your garage. Oil is volatile, it's poisonous. There are many things that you need to consider before keeping oil. So the cost of oil, keeping oil, is way higher than actually purchasing oil. That's why we saw that the price of oil went below zero as well. That means if a person wants to buy it, that means they're also going to get money for buying this oil, because they also are going to get money to uh, they are also going to get money to store it. Okay, whatever the rental or the cost of storing the particular oil. Okay, and especially who's going to sell, the seller is not going to get money. Seller has to give money, so that extra money can be given and provided to the person who's willing to take charge of it. And that's why negative money was being charged. So it's only for yesterday's case. The next month's contracts, which is May futures and everything else, and across Europe also, the futures contracts are not going in negative. So that doesn't mean that all over the world oil prices are negative. Please don't go to a petrol pump and expect that for filling your petrol pump is going to give you money, because that's not the case. This happened only as an exception yesterday for that particular contract, and it should not happen again. But of course, these situations are only condition. This is only going to happen in the futures market for a very special situation. All right. So I hope that makes sense. But again, connecting back to market, if the oil prices are falling down, what is going to be the impact on the stock market? Okay. Now, oil is a very important commodity when it comes to a lot of companies. Okay. There are some companies who are going to use oil directly as a raw material. Some companies who use oil indirectly as a raw material. So the moment raw material prices are falling down, a lot of companies are going to start making slightly higher profits because their costs are going to go down. Okay. So how is profit made? By either reducing costs or increasing income, right? So here cost reduction is happening. So biggest gainers would be companies who have direct relation to oil. First of all the companies who are going to be uh, basically manufacturing, so refining oil. So oil as a raw material they have to take and they have to refine it. They're going to get it at a cheaper cost. Then companies like Asian Paints, rubber making companies, like companies making tires, they're also going to be at a direct benefit, because artificial rubber is made out of crude oil. A lot of FMCG companies, because there are so many products which depend on oil prices. Okay, a lot of chemical organic compounds are again based from crude oil. So all these companies are going to benefit from it. So Asian Paint, even Pidilite is going to benefit slightly. One of the biggest gainers would be the airline companies, because they are 50%, more than 50%, or somewhere close to 50% of their cost is fuel cost, and fuel is going to get cheaper because it's a derivative of crude oil. Okay, so that is the impact on a certain segment. But what a lot of segments also sell oil, right? Those companies are not going to benefit that much, because now they're going to get lower prices for the oil. At the same time, overall, if the oil supply is reduced, and economy is going to get hit by oil somewhere down the line. Okay, that's why we saw some correction in the market today as well. They are reacting to the oil price. So any sharp price is not good, because that's going to affect overall commodity price, and there's a lot of impact which I don't want to go into right now, because that's a complete different subject. I'll probably make a whiteboard session based on how oil sharp prices in oil may affect stock markets. But right now, understand, some companies are going to benefit, some companies are going to get hit. Okay, sorry for that glitch. Okay, so as far as the stock market is concerned, you need to look at individual companies and then decide whether you want to go for it. Don't just use this news. Do a complete analysis before deciding which companies you can start buying. Okay, now coming to today's topic. Okay, before that, let me just check if I have any other questions, any comments, so that I can answer them directly. By the way, if you're watching this live, any feedback, suggestion, comments, you can just drop it in the comments below right away. I'll try to read it from my phone and try to answer them directly. I think I have one comment. Ameya has asked, thank you, Amey. Can we expect the Indian market to fall further? Well, that's actually a very good question. While I don't want to do any predictions personally, but I still am in the zone that Indian markets are still in bearish mode, because overall markets may have corrected because they took a sharp fall right after the corona lockdown news and everything. Economy stopped, stocks fell sharply, but suddenly they have now risen back. Okay, from a level of 7,500, we have come back to 9,000. But that positivity is because of people who are trying to buy a lot of stocks because of the discount that they're providing. But you need to understand, stocks are going to rise in future only when companies are going to start profiting. And right now, as the days of lockdown are being extended, as the economy is slowing down, the way the companies are going to start earning is going to go later, especially for companies which are going to be dealing in discretionary items, right? Like something which is not daily necessity, all those companies are going to take time to come back. Okay, only the basic necessity companies like FMCG and pharmaceuticals particularly are going to be doing fine because their business is more or less not affected. Okay, so of course the majority of the companies are not in basic needs sector, right? That's why overall market may not jump up suddenly. That's what my understanding is, that's what my expectation is. So at least 3 to 6 months is minimum where I'm looking at the Indian market still will be in bearish. Till the time economy doesn't turn around, we cannot expect the Indian market to go down. Having said that, the problem that is happening right now is that even though there is no earnings expectation, people are expecting a lot of earnings and hopes from market. So people are extremely bullish, and everybody because we Indians are great at sales. Okay, so everybody is treating this as a big discount sale, and which is what usually should be the case whenever market falls, right? You want the market to, you want the best prices, and you're getting stocks at a very, very cheap valuation. So yes, the markets are cheap, and that's why a lot of money is also coming in, especially from India, to start to buy stocks. Okay, now when will the market start fall further? When I see market falling below 8,500 and going below it. Right now it's more or less coming back on its track. Till the time it crosses 10,600, I will not be at a confidence level of saying that yes, we are back in bull market. Okay, so till that time I will still have slightly bearish outlook. Now whether the market goes up or down, you should not worry, because there are ways to make money in every market condition, and there are benefits and disadvantages of any market condition any which ways. Okay, and again, as I think one of the episodes in these live series is, I'm going to tell you the 10 different ways you can make money in the markets. I will cover that in detail, but as of now I would say be cautious. Don't buy too much too soon. If you want to buy stocks, start buying in small quantities and spread it across in short blast SIPs, okay, rather than just buying in bulk right away. Okay, I hope that answers your question, Ame. If yes, just give me an okay on the comments. If not, I think I would like to move ahead a little bit. Let me just check if we have any other comments for now. Okay, I don't see any questions. So let's just move on to today's topic. And of course, if you have any further questions, you can just put it in the comments and I will answer them at the end or maybe in tomorrow's session. Okay. I'll now go to my topic of the day, sharing my screen. Okay. So today's topic is very exciting, very something that most people have little or no knowledge about. It's the truth about dividends. Okay, now of course when it comes to dividends, everybody is very, very happy. Dividends is basically money that company gives you directly into your bank account, and people are very excited. A lot of talk is done before high dividend paying stocks. So especially new investors, when they're coming in, a lot of them talk about high dividend stocks. What exactly is dividend? How does it benefit? What is the effect on share prices? And what should you consider? What should be your mindset when it comes to looking at dividends? I'm going to cover all of that in today's topic. Okay, so now let us understand first basics. What exactly is a dividend? Okay, a dividend is, it stands for a divided part of company's profits. Okay, whenever a company at the end of the year has got, or at the end of any quarter for that matter, has got money coming into their books. They see, okay, they are now in profit. A part of that is distributed to the shareholders. Okay, so people who are holding the shares of those company are also part owners in the company, and as a part of profits being distributed, dividend is given as a divided profit among shareholders. Okay, so and every shareholder gets that little money. Okay, now there are two types of dividends. One is interim. Interim happens when within a year, whenever they have a good quarter and expected to have further more good quarters, company distributes dividend. That is called interim dividend. And then there's a final dividend, which is more common, where at the end of the financial year, company sees their books, and based on that, company will give dividends into shareholders account. Now, those of you who don't know, if you're holding a share in your demat account, or you're trading in a share, whatever bank account is connected to that demat account, the shares dividend gets credited directly into it. So it doesn't come into your trading account and not in your broker's account. That money is directly credited uh, into your bank account, which is connected to those trading and demat account. Okay, so this is fantastic for most people, because this is one of the most amazing passive sources of income that a person can expect. Okay, and here is the next important part that you need to know. Okay, dividend is not compulsory. Yes, that is something which a lot of people don't understand, whether to give a dividend or not. Companies do not have the obligation to give dividend. That is something which is understood, given in like, it's not told blatantly, but you need to understand that as a new investor, don't expect the company to give dividends every. So there is always going to be a board meeting based on which they will decide whether to give dividend or not. If they decide not to give dividend, that means that your dividends are not given to investors, and more importantly, as investors, there is no say that you have. At least you don't have the enough voting rights, especially if you've bought the stocks in stock market, then you're a minority shareholder. You have very little say in it. So you will have to go by company's decision. Okay, I hope that is something that you keep in mind. Next is the truth about dividend percentage. Okay, now you might see something very interesting. Let me take you to moneycontrol.com over here, where I have a list of some stocks which have given very nice dividend in the past few years. Okay, this is a list of companies which have declared dividend. Now you see ABB India has declared 240% dividend, and if you go to their stock right now, it's at 887 rupees. So 247%, that means almost 2.5 times the value of ABB stock price, right? So this is where a lot of confusion might arise. So don't look at these high percentages. The dividend percent is always based on company's face value and not market value. Okay, that is something you need to understand. So you're not going to get 2.5 times of this price. You're going to get 2.5 times, or 220, what was it? 240% of this price, which is given over here, face value. Okay, face value of a company is 2 rupees. Now, what is face value? Face value is the nominal price of a share which a company has on their books as the basic price of that stock to the company. Okay, that is their liability. When you buy that share in the market, you're buying 2 rupees worth of share, but you're paying a premium to the market. Okay, even in IPOs, you're paying over and above the face value to acquire that share. When you go into the stock market, you're paying somebody else, and the price of the stock is going to be always over and above face value. Sometimes it may go below it, but face value is always going to be something which company's value to the share is going to be. Okay, so it's again a nominal value to the share. And your dividend, even your bonus and stock splits, all of that calculation, whatever corporate actions are going to be taken, they're usually going to be connected to the face value of a company and not the market price of a company. So please keep that in mind. So in this case, if dividend is going to be 240% of 2 rupees, that means you're going to get somewhere around double of 2 to 40%, somewhere around 2.5 times of 2 rupees. Okay, that's, I would say, almost 5 rupees. And see, 240%, but the actual dividend is going to be slightly lesser. So keep that in mind. Hope that gives you some clarity about this topic. Now next, if you want to acquire a share, when do you buy the stock? Okay, you cannot get dividend just because you have the stock. You need to buy it before a certain date, and that date is known as dividend record date. Okay, now of course all our newspapers on Money Control and financial websites and companies, sorry, and the stock exchanges, there is going to be announcement of company's board deciding to give dividend. Okay, whenever they decide after a board meeting, that will be publicly announced as a part of public listed company. You have to watch and they will tell you what is going to be the record date of that particular stock. Okay, record date simply means whoever is on record shareholder on that particular day, he is entitled for the dividend. Okay, so if you plan to purchase a stock based on the fact that you want to acquire its dividend, make sure you buy before the record date. In fact, you need to buy it before the X date. What is X date? X date is the 1 day prior to record date, where if you purchase it, you don't get dividend. Now you might say, what is this confusion? Why not on record date? So basically you need to understand, in India, whenever you're buying a share, you are buying it as an intraday order. At the end of the day, only market decides whether it's a delivered stock. That means you want to hold it for a longer period of time, or you just want to share it on intraday itself. Okay, so before end of the day, nobody can say whether the person has purchased this stock for intraday or for delivery. Okay, at the end of the market hours, it is confirmed that the stock is now available for delivery. So in this case, exchange sends all the notification, and all the system, the backend system, works behind to notify the company that the owner of this stock has changed. Okay, so whatever your details are, that is going to be connected, and the previous owner of that share, his information is going to be removed from company's books. Okay, that switch has to happen, and this entire process takes about 2 days, 2 working days. That's why in India we have a settlement cycle, that all of this entire settlement and change of names and book and the stock coming into somebody's demat account takes T plus 2 days. So that's why T plus 2 settlement is there. That's why if record date is on 25th of September in this example, okay, usually dividend might be announced 1 or 2 or maybe 3 or 4 months before as well. It can be, say, let's say May 26th they announce the dividend, record date would be 25th. So your X date is going to be a date before. Okay, in this case there is a slight change. Usually it's going to be 2 days before the 2 days before record date. Okay, there is slight error in this slide. I will remove it. So you need to, suppose 25th is the record date, you need to buy 2 working days minimum prior to the 25th. So in India it will be 22nd. Okay, let me just remove that. Okay, I hope that is clear. I think I've removed that slide for some reason, but okay, I'll make that modification later. Dividend percentage. Now, the other shocking fact, or something that a lot of people have no idea or don't realize, is that the share price of a stock always falls down after dividend, and it usually falls in tandem with the amount of money that they have given as dividend. What do I mean by that? So suppose there's a company who's trading at 100 rupees in the market, and they declare a dividend of 2 rupees. Okay, that means net 2 rupees is coming into their investors' pocket. Immediately after the X date, the moment the stock goes X dividend date, there's going to be 2 rupees reduction in the stock price. That means the stock will be trading at 98 rupees. Okay, so those of you who are thinking that if you purchase a stock and you also get a dividend, that means you're going to get benefit of dividend as well and stock price rise as well. That may not happen, because that dividend price which is coming into your bank account is already adjusted in the stock price. Now, whenever you buy a stock at a certain price and sell it at a higher price, this particular way of making money is known as capital appreciation or capital gains. Okay, so whenever you're thinking of capital gains, think of it as a separate calculation, because dividend is not going to play a factor in it. That is already removed. Now you might ask, why is that? So why is the price of a stock reduced so much? Now it is not a compulsory action, but think about it this way. company is giving dividend to its shareholders. That money is coming from company's net profit, and net profit directly plays a part in company's overall value, right? We evaluate companies on the base of their profitability. The moment dividend is taken out from that profit, that means company's profit is reducing. And as soon as company's profit is reduced, their share value has to take an impact, because shares value depend on companies' ability to make profits, not their ability to give dividends. And that is something I wanted to keep in mind whenever you're buying stocks. Okay. And I'll also come to analysis in a couple of points from now. So always remember this: if you see a stock price suddenly for 2-3 rupees, that means they are just turning X dividend, especially in case of a company which has declared dividend. Okay. Next, something that you need to know is dividend yield. So how much earning can you do on a dividend? That is known as dividend yield. So we already know that high percentage that they declare, sometimes it's 400%, 500%. It is based on the face value of a company. If you want to know what exactly are your earnings based on the dividend earned and based on the money that you've invested, you get dividend yield. Okay. So if I just quickly go to Investopedia, that's my standard website, tell you the dividend yield. Okay. Tell you the formula for dividend yield. Okay. A dividend yield is basically expressed as a percentage of current share price. Okay. How much percentage are you gaining based on the amount of money that you've invested? Okay. So over here, you can just see if they've given. So dividend yield formula is given over here. Let me just increase the font size. Yeah, so over here dividend yield is given. Dividend yield equal to annual dividend divided by share price. Okay, so any company, whenever they're distributing dividend, you calculate the money that you've earned in that annual or final dividend and you divide it by the share price at which you have bought. So that will give you the net amount of money that you earn. Okay, so in case of a 2 rupee share, a 2 rupee dividend given on a 100 rupee share, your dividend earning would be 2%, 2 divided by 100. Okay, now this is something that you need to calculate, and that's why what is going to happen, dividend yield is usually not going to cross your fixed deposit yield. Okay, I say usually because there will always be exceptions. Sometimes you might get dividend yield higher than fixed deposit as well. Okay, in India, fixed deposit rates range from 6 to 7%, maybe lower in sometimes, and they might be getting lower as we go ahead in the future, right? Usually above 7% returns as dividend yield is very, very difficult, because what happens is the moment you see a company's high dividend paying company, people start buying the stock. The moment people start buying the stock, what happens? The stock price appreciates. And the moment stock price starts appreciating because of high demand, what's going to happen? A 100 rupee stock is not going to stay 100 rupees. It's going to go to 120, 150. Okay, so even if a stock, let's say same 100 rupee worth stock company is giving 10 rupees as dividend. Okay, so that means 10% dividend yield, which is way better than fixed deposits. The moment people hear this, they're going to start purchasing this particular stock, and then the stock price will see a rise. 100 rupee stock will go to 120, 150. The moment it goes to 150, even it might go to 180 as well. Suddenly 10 rupees would not be exact 10% of that stock. It will be lower, and that dividend yield, okay, dividend yield is going to keep decreasing. So that's why don't try to cross fixed deposit returns. If you really want fixed deposit returns, I would say go to fixed deposits. Don't come into stock markets thinking about safe dividend paying stocks unless you already have plans of purchasing the stock and buying it for capital gains, because then dividend becomes a bonus income for you. I hope that brings in some light, because otherwise look at the kind of returns that you're getting. If you just buy a stock for dividend, okay, let's go back to the same. Okay, if you, let's say you're buying CRISIL, okay, your CRISIL stock right now is at 1400 rupees. So one stock for 1400 rupees, and their face value is 1. They've given 1300% dividend, sorry, 3200% yield. That means that is percentage of face value. Okay, 1 rupee, 3200 something. I think they've given 320 rupees, but it's still not worth investing that kind of money in one stock just for getting the dividend income. Unless you're going to buy huge quantities of that stock, dividend yield or dividend income is not going to be that exciting. Okay. So this is what I recommend to my students and clients as well. Whenever you're buying dividends, make sure that you keep this in mind. Don't try to break records. High dividend paying stocks are good, and you can purchase them and get good returns on it if you time them correctly. But also keep a track that this is not going to be one. It's not going to be every year. So long term wise, 7 8 years wise, you might not get the same results, and you might see decline in dividend yield as well. Just be careful of it. If you're getting great dividend yield, please by all means go ahead and buy that stock. Okay, just keep a couple of things in mind which I've mentioned already. Next, now here's something that you need to know as an investor in the stock market. A lot of people get confused thinking that dividend is for shareholders benefit. Okay, yes, it is for shareholders benefit, but do you know this fact? The promoters are the biggest shareholders of a company. So the biggest beneficiary of dividend is always going to be promoters. Dividends are the way by which promoters reward themselves. And as a minority shareholders, because you're also part of the company and you've purchased the share from stock market, you get certain percentage out of it. Okay. Now you might say, why are we getting such small amounts of money? And if it's not exciting, then why to even think about dividends? That is fine. You might have bought 10 shares, 100 shares of a company, and that is giving 2 rupees dividend. Okay, maybe 10 rupees dividend. So on 100 shares, you might get 1,000 rupees in your bank account, and that may not excite you based on what you have purchased that stock for. But as far as a promoter is concerned, he is holding thousands, lakhs, and crores of shares of his own company. So if a promoter has got, let's say, a few lakh shares of a company and he's getting 10 rupees per share dividend, that means he's going to get 10 multiplied by those many lakhs. Let's say he has 1 crore quantity of shares. That means he's getting 10 crore as dividend income. And that is where most of the times when board is deciding, board members are also majority stakeholders in a company. A lot of them have good stake, or at least there is some, there is going to be always people who are in the meeting. Majority shareholders are the ones who decide whether to give dividend or not. Okay, so again, promoters are the ones who are going to benefit. And why shouldn't they? They have stood up a company. It's a huge business and they've done a lot. The reason why this was a way of promoters to reward themselves is that earlier dividend did not have tax on it. Why? Because dividend was paid out of net profit, in which net profit is always calculated after paying tax. Then there was also something known as dividend distribution tax, which was again, the corporates had to pay that. And that's when, after paying all of that, money would come into people's account. So dividend distribution tax, and then taxes on the profits which have already earned. After that, there shouldn't be double taxing. That's why dividend was not taxed earlier in India. Now, sadly, that's not the case. Anytime anybody is earning more than 10 lakh rupees in dividend, then there's a tax on that. Even if it's a promoter or a minority shareholder, it doesn't matter. If your dividend amount is more than 10 lakh rupees coming into your bank account, then you're charged at 10% on that. Okay. At the same time, company is going to now start charging people who are receiving dividends as well. Not company, Indian government is going to start charging. They have recently made an announcement. I would encourage you to go and check what is the percentage of it. And in fact, you guys should go ahead and tell me in the comments below what exactly is that. Become informed investors. And you should know, even mutual funds who are going to give dividends to their equity based mutual funds, they also are going to be now, they have to charge tax on dividends as well. So make sure that you're aware of these taxes. I don't want to give any random numbers. That's why I will have to do a confirmed check about those numbers. That's why I'm not giving that in my live stream. But if anybody has that idea, you can of course put it in the comments below and share it with everybody. So now I've already mentioned dividend distribution tax and wealth tax. Again, so that now what is happening with promoters is that they are taxed with wealth tax as well, which is of course getting extra money. And Indian government is trying to stop promoters from getting tax-free income. Okay, because earlier, instead of taking salaries, they could just take dividend and not pay taxes on it. So right now, what is going to happen? A lot of promoters are now going to start going into buybacks. Buybacks was another way of making sure that the investors are rewarded. what happens is instead of giving dividends to an investor for 5 rupees, let's say they decided 5 rupee dividend, instead of that, what they would do is they would buy the share back from investors at a higher price, maybe slightly 1 or 2, maybe 5 rupees higher than the market price. Okay, so that actually helped investors make extra money as well. Even people who are holding stocks could get some fixed earnings from a stock by making that locked in profit given by the company itself rather than buying and selling in the market. Okay, but again, there is talks of buybacks being taxed again. So maybe we'll go back to dividend paying regime of corporates. Okay, so now here is the final and important part. So how do you take dividend as a piece of information? Okay, now dividend and company analysis is good, but don't make it as a shortcut. So overall, first, don't just buy a stock for dividend. That is what I've already mentioned. Second, just because a company is giving high dividend yield doesn't mean it's a high profit making company. It could be that for that year the company has made extra money. Okay, and that's when they're distributing it back, or maybe the promoters are trying to fill in their own pockets. You don't know that. Okay, so you need to see consistent dividend growth over a period of time, and that is how you'll be able to know that a company is a consistently profitable company. So the analysis goes this way, that if a company is able to pay its dividend consistently over 5, 10, 15, 20 years, that means this company has consistently made net profits. Okay, so that's one analysis you should always use. That's why dividend paying companies are good and not for the other reason. It always draws down to EPS, that is earnings per share, which simply means net profit divided by number of shares. So it's a measure of the profit of company. So you make sure that the EPS of the company is growing, earnings are growing as well along with dividend. If you see that, then you see, okay, fine, this is a consistent earning company, and maybe you can start looking into analyzing it further. Okay, at the same time, some growth companies might decide not to give dividends as well. Promoters might take a back seat, they will not take money. Even the shareholders might not be getting money. That doesn't mean a company is bad, because it might happen that the company is trying to save some capital from the net profits. They're going to either fill in their reserves. So reserves is an important part, and I talk about this in my 5-point analysis. At the same time, what if a company wants to grow, they want to expand further, they don't want external capital, right? They don't want to borrow money from outside, they don't want to get new investors. What they can do is they can use their own cash. Instead of distributing it to shareholders, they can use it to grow their business. Okay, so in case of growth companies, you might see that there's no dividend given for 2, 3, 5 years as well, and that could be okay as well. That does not necessarily mean it's a negative company, it's a bad company. Okay, so again, it boils down to EPS. So focus more on EPS than dividend when you're talking about companies. Okay, and ultimately, if you're buying a stock, buy it for capital appreciation is what my recommendation is. If you're going to be buying for dividend yield, then make sure that you buy it in such huge quantities that it justifies your overall dividend income that is coming in, and get ready to pay taxes on it as well. Okay, so that's it for today. This was the truth about dividends session. Please tell me comments, feedback, sessions, questions, all are welcome in the comments below. I'm going to keep an eye on my comments right now. At the same time, oh, thank you, Amit has just mentioned thank you in his comments. At the same time, please share this video with anybody that you think can benefit from this information. Ask your friends to watch, like. If you have already liked this video, make sure you put a like as well. Okay, this will help this video to go to a lot more people. Okay, and at the end of the day, if you want to learn stock markets seriously, put it in the comments below. I'll send in my brochure copy, so you can download and know about all about the courses that I'm offering. Okay, we do have courses starting from basics to the fundamentals, futures, options, all of that. I have courses, and I've pre-recorded courses. Usually I used to do live courses earlier, but thanks to lockdown, we are right now stuck with this medium, and it's good because all stock market information is now available online. So learning it online just makes so much sense. Okay, so that's it for me today. This was Yatin Ranade, episode number 2. Tomorrow we're going to have episode number 3 for the next 10 days. Stay tuned. on this page. Be very active. I'll be sharing a lot of information about stock market. And of course, do let me know if you want me to cover some topic or pointers. I'll be glad to add it to my next live stream. Okay. So one last check at the comments and my WhatsApp before I say good night. Nikhil has asked me to send the link. Nikhil, I'll just message it right now. And all comments checking in right now. Okay. All right then. That's it for today. Thank you so much. A good night. Have a lovely lockdown. Make sure that you're learning more so that you're earning more. Okay. Good night.